Yes, let's begin. PGBP, profits and gains from business or profession. What are the sections that we have? These are the broad deductions that we have, and these are the broad disallowances that we have. Okay, and coming to this one, finally, books of accounts, tax audit, presumptive taxation, that one. PGBP is very easy. First, we need to understand the structure of the PGBP, provisions. What is the structure of the PGBP provisions? And PGBP is a major chapter that is tested as a part of, first question, total income. Previously also I have already told you, this is what mainly tested in the total income. Just a minute, let me share the link to the students. Just a minute. Yeah, sorry. So these are the sections, right? Like this is one of the tough head of income, which like people, like many students think that they understand very well PGBP, but now the kind of wherever you have crux, in PGBP, wherever you have that somewhere, you're not getting strong connection, right? Next to 1 hour PGBP, you are going to get that connection. You will have a clarity like never before in the PGBP. Mark my word again, as usual, how previous chapter residential status and house property, especially total income problem, alternative minimum tax, default tax regime, how I have covered. Similarly, I'm going to cover PGBP also. In PGBP, now what the kind of clarity that you're going to get is something different. Just stick to this till the end of the session. Look at this. In PGBP, the sections are broadly divided into, these are the types, broadly divided into, I can say 5 categories. 1, charging section, 28, and there is another section called 41. Both are talking about incomes. 28 talk about what incomes are taxable under PGBP. 41 deemed profits. Remember, recovery of bad debt, waiver of trading liability, scientific research related assets sold directly. Exactly, that one. Then 29 talks about how to compute income under PGBP. There is a section. Then we have remaining sections 30 to 38. These entire sections are talking about deductions. These entire sections are talking about deductions. Deductions from what? All these incomes minus these deductions. Whereas section 40 to 43B, these sections, they talk about conditions for these deductions. These sections are actually what? Conditions. 40 to 43B are not they are conditions. They are nothing but disallowance sections. We call, many students only know that it's a disallowance section. They're actually conditions. In these sections, whatever expenses, suppose I am paying salary to an employee, 37 it will come. Can I claim deduction? You can claim. One condition, 40A subsection 3, do not pay it in cash if at all payment is more than 10,000. Simple. So 40 series is entirely talking about conditions for various deductions. The structure of the chapter, if you don't understand like this, I don't think PGBP you understood it thoroughly. This is the structure of the chapter. Next. Then 44AA, 44AB, 44AD, 44ADA, 44AE. Believe me, 44AA, books of accounts provision, something which many students are having some clarity. For them clarity is missing. I made this entire provision in a single page. Wonderfully you will understand. Tax audit, presumptive, everything I am going to give you a crystal clear clarity. This is the entire PGBP. Now, before I start all these deductions, how a problem will come in the total income? This is the question. Generally, PGBP will be asked as a part of total income, where they give you profit and loss account. Profit and loss account will have all incomes credit side, all expenses debit side they will be having. Now, and they will give you net profit as per P&L account they will give you. We always, how to compute PGBP income? Can I take business or profession is equal to net profit directly? No, you should not take. Why? Because in the income, in the income side, so many other heads of income is also credited. in the income side, in the P&L credit side, so many other heads would have been credited, so many items are credited which are not taxable, or exempted or other heads related. So many were credited, right? Because of this credit, what happened? The profit is more. PGBP income, you cannot as it is take it as a PGBP income. So if you start with net profit as per P&L, whatever incomes that were credited in P&L but are not taxable under income tax, how to get PGBP income? This is like a bank reconciliation statement logic. How to get PGBP income? Reduce them, that's it. Same way, there are many expenses which are debited here. In P&L account, many expenses would have been debited. I am talking about P&L account as per books of accounts, nothing but that is what in exam they'll give you in the total income. Same way, many expenses were debited in the P&L account. Some of these expenses, they are related to some other head of income. Or they are related to either they are related to some head of income, or they are disallowed. Disallowed means what? This expenditure you cannot get under PGBP, you can't claim. Some students are asking, sir, what are the important questions we have to solve? It's not about questions. Get the concept correctly. You see and open any question you can solve. MTP, latest MTP questions were there, and this one, September 24 related suggested answer, must and should watch it. Getting it? If you remember, if you understand what I'm going to tell right now, believe me, any problem you can solve. Mark my word, any problem you can solve. Directly tomorrow a new question comes in exam. Obviously it will come a new question. There is no question will be repeated. Getting a new question only will come. Okay, so any item that is debited, pay attention. Any item that is debited to P&L. Because of debit, what happened? Net profit decreased. But this is debit is nothing but what? In the P&L, debit means what? While calculating profit, debit item in P&L means from income they reduced it, correct? But under PGBP, this reduction should not be there, because this is expenditure belonging to other head of income, or this expenditure is not allowed under PGBP. If that is the case, how to get PGBP profit from this? Because this is debited, because of this is reduced, now I have to increase it. Therefore, I will add disallowances, other expenses under other heads of incomes, all that I will add. Further, not only P&L, in problem no, they will give you additional information. They'll give you. What will be there in the additional information? Yeah, he might have incurred some expenditure in business. Some business related expenditure is there. All conditions under 40 series are met, satisfied, but this is not debited to P&L. Oh, not debited to P&L means this profit which is computed is not after reducing that. Now, so you see additional information. So some expenditure is missing here. Now under PGBP this expenditure is allowed. Under PGBP this expenditure you can claim it as deduction. What should I do to get PGBP income? Reduce it. Minus additional expenditure which is not debited to P&L, reduce it. Same way, some income related information will be given in the additional information which is not recognized in P&L account, but this income is actually taxable where? PGBP, but not recognized here. So in this PGBP computation, until now what we did is, do we included this income? We didn't include it. So add it. These are the 4 variety of adjustments you will find. One more adjustment is sometimes depreciation will be debited in P&L account. Generally this depreciation will be calculated as per some other provisions of the Companies Act, some other provision. Suppose in the problem they have given depreciation, below your notes you see, suppose in the additional information they gave you WDV, block values, all that, then you should calculate depreciation afresh. This depreciation is called as book depreciation. Please add back. Book depreciation, add back. Why are you adding back? Because we will once again reduce depreciation as per section 32, we will reduce. Then finally what you get is called as income from business or profession, or profits and gains from business or profession. So to calculate these items and all, these are all the various adjustments that you need to do. Once again replay the video if at all you are having a doubt. These are the broad variety of adjustments that will be there. Beyond this you will not find any adjustments. I hope you are clear. This is how you should solve when P&L account is given. Sometimes, very rare times, the ICAI might give you receipts and payments account, where you know, all the receipts will be either left side or left side only. Most receipts will be given in the left side and payments will be given on the right side, or sometimes receipts will be given on the right side, payments will be given on the left side. So whatever it is, sometimes direct receipts or what, direct payments or what, they'll give you. That time how to solve PGBP income, you know, very simple. In receipts, no, so many receipts will be there. Business related will be there, house property will be there, other sources will be there, salaries will be there, so many will be there. Don't take all this. Suppose, no, this is PGBP receipt, this is PGBP receipt, something is there, this is PGBP receipt, you know, add it. How income from business or profession computation, okay, PGBP receipt, add it, PGBP receipt, add it, PGBP receipt, add it, total it. Then minus expenses. Here so many expenses were there in payment side, right? Not all these, just a minute, not all these expenses are PGBP, only few. So select only those few PGBP items and reduce them. That's it. You will get income under the head. You will get income under the head. Income from business or profession, you will get. That's it. If receipts and payments account is given, we directly take those receipts which are taxable under PGBP. We directly reduce those payments which are deductible under PGBP. That's it. This is how PGBP problem has to be computed. Now let's look at actual provisions under PGBP. What are various deductions we have? What are the conditions for deductions? All that we will be looking at now. So look at this entire the speculation concept, all that you take care on your own. Okay, first deduction, section number 30. Section 30 talks about what are the expenses that you can reduce in case if it is a building. Suppose, no, if at all building is occupied as a tenant, suppose you're occupying as a tenant, tenant for rent, whatever rent paid, no, that is allowed. Remember, in entire PGBP, at many places the word paid will be used. Paid means it's not actually paid. Paid means depending upon the method of accounting, it is either paid or it is either payable, nothing but it is incurred. In entire PGBP, the word paid, payable words are used, right? That actually means incurred. Incurred means what? Accrued. Expenditure is accrued. Are you getting it? 99% of the cases SSCs will be following mercantile basis. When the SSC is following mercantile basis, all the expenses which are incurred during that particular previous year will be allowed as a deduction. If the SSC is following cash basis of accounting, then all the expenses and incomes are taxable irrespective of the period to which they belong to. And we have a section called 43B. 43B. This section is applicable only to those SSCs who are following mercantile basis. 43B section is applicable only to those SSCs who are following mercantile. Under 43B, 7 expenses they listed. 7 expenses they listed. Those 7 expenses alone, actual payment is required. Those 7 expenses alone, you will get a deduction only if they were actually paid. Anyhow, once I come to 43B, there I will discuss. Right now, section 30. So for tenant, rent is allowed as deduction. Repairs expenditure, tenant which he is bearing, he is allowed. By the way, building, you know, which building? Tenant taken a building for business purpose, profession purpose. Related rent, you can claim deduction. Repairs, you can claim deduction. Any property taxes, if tenant is paying out of his pocket, that is also allowed as deduction, subject to 43B. Owner. What expenses owner can claim? Except and everything is common. Everything means everything else is everything else is what? Expenses of repairs, property taxes. Only these two. Sometimes, no, partnership firm is doing business. Partnership firm is taking from the partner property on rent. Business building is there, that's actually owned by partner. Rent paid to partner by partnership firm is an expenditure allowed as deduction subject to 40A2. Subject to 40A2. It should be reasonable rent amount. So that is nothing but 40A2 provision will apply. Then we all know, suppose if at all to the building any capital expenditure is incurred, that's called capital repairs. What we should do? We cannot claim deduction. What we should do regarding capital expenditure? That capital expenditure will be added to block of asset. Respect to capital, you know, suppose I spend some repairs on building, capital repairs, that is added to buildings block. Getting it? Capital repairs, on that only depreciation can be claimed. Suppose if you are using business if you are using the building partly for business and partly for others means residential or some other purpose but not related to business, then all the above expenses what we discussed, you know, you can only claim proportionately. Over. Buildings discussion over. Then coming to, you know, machinery, plant, furniture related expenses. What expenses are there? Same. repairs and maintenance expenses of machinery, plant, everything you can claim. For plant, machinery, furniture, except depreciation, every expenditure can be claimed under 31. This section is dealing with 31. Remember, only current repairs are allowed. Capital repairs, again, they are not deductible but are added to block of asset. Getting it? Sometimes in problem they'll give you arrears of repair. Arrears of repair means there's an argument going on from long years ago. Now arrears are finalized. Now I have to pay some repair amount belonging to very old argument, very old dispute. That time I didn't recognize it as expenditure. Now I am paying as an arrear. Now that will be deducted under 37 directly, not 31. Whatever it is a deduction. Getting it? Repairs includes means what? Repair, renewals, renovations, all that. Not complete replacement. If it's a complete replacement, it's a capital expenditure. That's it. Okay. Then insurance. With respect to machinery, plant, furniture, we generally take insurance also. At the time, deduction is allowed for the insurance premium paid, which is used in the business. Contributions to trade associations. What is this trade association point? Very simple. Sometimes we are part of Chamber of Commerce. We are part of some local Chamber of Commerce is there. In the Chamber of Commerce is giving us insurance facility. For that we are paying some amount to them on a yearly basis for insuring all our assets. That expenditure is deductible. Now Chamber of Commerce is reimbursing you the entire loss of expenditure. So you are getting benefit. No, if at all you suffered any loss, Chamber of Commerce is reimbursing you. So absolutely you don't have to worry. So whatever insurance amount you are paying to Chamber of Commerce, no association, no, that you can claim it as deduction. Chamber of Commerce, they might have taken insurance from insurance company. They might have got some reimbursement. That is irrelevant for you. It doesn't matter. At the end of the day, from your pocket, how much you paid for insurance, that is only matters. You can claim it as a deduction. Are you clear? Property taxes only subject to 43B. Here property taxes is there, right? That is only subject to PGBP. Next, most important topic, depreciation. The most important topic, depreciation. Many students have some problem in computing depreciation. That's why I gave you a simplified format. In exam you should present depreciation working like this only. Exactly like this you should present. Sometimes a dedicated depreciation question might come, or part of PGBP, total income problem, depreciation would have been given major importance. We don't know how they are going to ask. Okay, how to compute depreciation. Remember, I am going to tell you all the checkpoints here. Be careful about these checkpoints. Trust me, if you follow these checkpoints, if you follow this format as it is, you can never compute depreciation wrongly. You can never compute wrongly. Always your depreciation answer is right. Some of you or many of you would have calculated depreciation wrongly at multiple places, right? There is a possibility. Directly will solve the problem. Getting it? For example, you know, what is the how to compute depreciation? Very simple. I'll give you one example. Okay. You know, WDV as on 31st March 2023. Just look at these wordings carefully. WDV as on 31st March 2023. Let us assume the WDV is 10 lakhs. By the way, I am talking about something called plant and machinery 15% block. I am talking about plant and machinery. Just a minute. Yeah, plant and machinery 15% block. Okay. Now the information is given for 23-24 financial year. Information is given for 23-24 financial year. In 23-24, okay, we purchased 3 assets. 1, machinery 1, machinery 2, machinery 3 we purchased. Machinery 1 purchased on 4th July 2023. Immediately installed. Immediately it was installed. Okay, and this machinery value is, let us assume, 3 lakh. Then machinery 2 we purchased. This machinery 2 we purchased on 10th October 2023. When it is purchased? 10th October. Better I will use another name. Better I will give another name. 4th October 2023 or 5th October. Better will take 5th October 2023. You getting it? I purchased another 3 lakhs worth of machine. Then machinery 3. Again machinery 3 I purchased. What is machinery 3? 10th December 2023 I purchased, and it is used immediately. It is also used immediately. You getting it? Both are used immediately. Actually here let us assume 10th December what we are purchasing. No, we are not using it. We are not using means we didn't install it. We have not at all installed it. Then 4 lakh. Let us assume that value is what? 4 lakh. Totally how much worth of purchases have? 10 lakhs worth of purchases have. In the same year there is a sale. In the same year, I sold part of a block, not full block. Remember, part of a block I sold. Only part of a block I sold. Part of a block I sold it for approximately 8 lakhs. Part of a block is sold for how much? 8 lakhs. Compute depreciation, assuming all these missions are new machineries, assuming this is a manufacturing sector, assuming additional depreciation is also available. Very simple. How to compute depreciation here? Now let us substitute the values. You know what is the opening balance? You know, we have to compute depreciation. By the way, in this question we have to compute depreciation for 23-24. Actual problem is, what is the closing WDV as on 31st March after depreciation? How much this is? This is the question. 99.99% this answer, many students do wrong. Why? They have given WDV value as on 31st March. Remember, WDV as on 31st March, WDV value as on 31st March means it's always before depreciation. If they tell you specifically after depreciation, then only you will believe that it is after depreciation. Otherwise, written down value means before depreciation. Remember, written down value on 31st March, if at all problem information is given, if after depreciation word is not there, we consider that as before depreciation. So first what we should do, you know, we should compute opening value as on 1st April. 1st April, you see, what is the format? Just a minute. What is the format here? Opening value first you should compute. Opening balance of the block as on 1st April you should compute. How to compute opening balance? Very simple. Last year closing balance 10 lakhs is there a WDV. Since after depreciation word is not used in the question, it is called as before depreciation. So minus 15% depreciation, 8.5 lakh is the closing balance of the last year after depreciation, which will become opening balance in the current year. Very important. So how much is the opening balance? 8,50,000 rupees is the opening balance. Now, is the assets purchased during the year? Yes, we purchased during the year. We purchased 3 missions. Machinery 3, you see, we purchased it newly on 10th December, but we didn't install at all. We have not installed, not used at all. How much is that value? 4 lakh. Assets acquired but not installed. How much it is? 4 lakh. Then we have 2 more assets. Asset acquired, purchased on 5th October and installed from the same date, used from the same date. How much is that? 3 lakh. 5th October means what, you know? From 5th October, if you take, in October 1, 31 minus October 4 means 27 days October, 30 days November, December 31 days, January 31 days, 2024 is a leap year. Okay, February 29, March 31, 179 days. It is used for how many days? 5th October, if an asset is installed, it is used for how many days? 179, which means a mission is used for less than 180 days. So it has to be substituted. Asset put to use for less than 180 days. How much in our problem? 3 lakh. Then we have purchased another mission. Then we have purchased another mission on 4th July and it is used. How much it is? 3 lakh. And this machinery is used for how many days? More than or equal to 180 days. How much is this? 3 lakh. Now, what is this value? Gross value of the block. Step 1, step 2. Yes or no? By the way, step 2 is what total? 10 lakh. So step 1 is what? 8 lakh 50. Step 2 is what? 10 lakh. So what is the gross block value? 18 lakh 50,000 rupees is the gross block value. I call this as gross value of the block. Now reduce. What you should reduce? Money received in respect of any part of a block which is sold, discarded, demolished, whatever. You received some money for a part of a block. Part of a block, what happened? Either it was sold, or it was damaged, or it was something happened, but I got money because of that. Either sale, damage, whatever, but I got money because of that. In our problem, how much it is? Sale is there. 8 lakhs worth of part of a block only sold. Remember, if full block is sold, depreciation will not apply. Section 32 is applicable. Section 32 applicable when there must be at least one asset in the block. There must be at least one asset in the block. And there must be some value available for depreciation. There must be value available for depreciation. Value available for depreciation is called as WDV of the block. WDV must be there and asset must be there in the block. If these two conditions are satisfied, you can only claim depreciation. Now let's understand. What is the sale price? 8 lakh. What is the sale value? 8 lakh. Now, what is the closing WDV of the block? What is it? 10 lakh 50,000 rupees is the closing WDV of the block. Depreciation concept I'm completing right now. Okay, because in this answer itself I'm going to give you 100% answer. I'm going to give you 100% answer. 10 lakh 50,000. What is it? 10 lakh 50,000 is the closing WDV of the block. Fine. Now WDV value is there. Still part of the block is there because only part is sold. Part of the block is the WDV value positive is there. Since both the conditions are satisfied, section 50 short term capital gain, short term capital loss I will not apply. I will calculate depreciation. Now less depreciation, working note 1. Don't put it here directly. Always come. What is the value available for depreciation? 10 lakh 50,000 minus. Out of this 10 lakh 50, straight away allocate. Suppose if at all asset is not at all used during the year, if there is any asset which is not used during the year, straight away remove from that value 4 lakhs. Straight away remove from that value 4 lakhs. Then balance value is what? 6 lakh 50. What is the balance value then? 6 lakh 50,000. Straight away 4 lakhs you have to reduce. Why? This 4 lakhs is not eligible for depreciation. Now we are calculating depreciation on the balance value. Balance value means what? Tell me. Generally, we sold part of a block for 8 lakhs, right? Logically, generally tell me which assets we will sell. Do we sell old assets or new assets? Old assets we will sell. We will not sell new assets generally. Or recently I purchased, I will not sell. Old I will sell. Which means after selling, any value is there. Now, generally this value is represented by new assets. Exactly, new assets. Among all these three, which is most new? I purchased this on July, I purchased this in October, I purchased this in December. First 4 lakhs I will allocate for December. First 4 lakhs I will allocate for December. But in the December it is not installed, not used. So it is not eligible for depreciation. First point. Then, okay sir, out of the WDV value, balance available how much? Value available for depreciation. This actually fifth point is called as what? Value available for depreciation. Nothing but WDV. Balance value is called as how much? 6. Balance value is how much? 6 lakh 50. This is used no? Yes. Again, this 6 lakh 50. First allocate the above value. This 6 lakh 50 shall be allocated for assets used for less than 180. How much is the asset used for less than 180? 3 lakh. First I will allocate here 3 lakh. Okay. Then balancing figure. Out of 10 lakh 50, 4 lakh is allocated for assets not used because that is not at all eligible for depreciation. Then I allocated the value first. Then I allocated the value for assets used for less than 180. If still I have a balance amount, what is the balance amount I have? 6 lakh 50 minus 3. Then 3 lakh 50,000 is the balancing figure here. 3 lakh 50,000 is the balancing figure. On this apply full rate. On this apply full rate. Whereas on this apply half rate into 15% into 1 by 2 is equal to 3 lakhs into 15% divided by 3 lakhs into 15% divided by 2 is equal to 22,500. Whereas 3 lakh 50,000 into 15%, 52,500. Total normal depreciation is equal to B and A. Total normal depreciation is equal to 75,000 rupee. That's it. This is normal depreciation. I hope until now everyone understood. Okay, everyone understood. Now, additional part number 2. See, depreciation working note will always have 2 parts. Part 1 normal depreciation, part 2 additional. Additional will be given for manufacturing sector or power sector who is following block of asset method. Only for them additional depreciation will be given. Now, machinery in our problem which is acquired and not installed. How much is the value of the machinery? 4 lakh which we acquired and not used. Yes or no? 4 lakhs is something which we acquired and not used. So, no additional depreciation. Mission number, some mission we purchased. More than or equal to 180 days I have used. How much is the machinery which I used for more than or equal to 180 days? Straight away 3 lakh. How much is the value? 3 lakh. Less than 180 days how much is there? Less than 180 how much is there? Again that is also 3 lakh. Just a minute. That is also 3 lakh. Mission brought forward last year additional depreciation to be claimed. Sometimes no, last year additional depreciation is there. Less than 180 days it is there. Half only they claim. This year remaining 10% can be claimed. That amount if it is there, that also please claim it. But let us assume in this problem it is not there. Now this is 3 lakhs. 3 lakhs into 20% means what? 60,000. 3 lakhs. This is into 10% means what? 30,000. So total additional depreciation is what? 90. Total depreciation is what? Part 1 normal depreciation 75, additional depreciation 90 is equal to 1,65,000 is the total depreciation. Now I will come back to block. So less depreciation, how much it is? 1,65,000 I will reduce. What is the balance value? 10,50,000 minus 1,65,000 is equal to 8,85,000. This is the answer they are asking. This is the answer they are asking. 8,85,000 is the answer. I hope every one of you understood. I clearly explained the logic. If at all you felt you didn't understand, once again replay the video from the past, you will understand. This is how you should calculate depreciation. What we learned in this indirectly we learned that depreciation is eligible only if the asset is put to use. Only if the asset is put to use. SSE must be owner. And you see here, capital repairs incurred is also to be added to block. But in our example, it is 0. That's why we didn't add. Getting it? Assets which are acquired but not installed, that is also to be added. But remember, this is not eligible for depreciation. When you are claiming value, when you are claiming depreciation on this value, first eliminate the assets which are purchased during the year and not at all installed. Eliminate. Then balance value will be there. Then allocate that value for first which are used for less than 180. If still some value is there, then allocate it for balancing figure. On balancing figure, full 8. When you are claiming additional depreciation, this value 10,50,000 is irrelevant. What is relevant for claiming additional depreciation? Purchase cost is relevant. For claiming additional depreciation, purchase cost is relevant. Now again, additional depreciation can be claimed only when it is installed. If it is not installed, 0. If it is installed installed and used for more than 180 days, you can claim 20%. If it is used for less than 180, 10%. I hope you are clear. Next. So this is depreciation computation format. Now conditions: SSE must be the owner, asset must be put to use during the year. Now what is a block of asset? Block of asset means what? Under income tax, block of asset means asset falling under same category, carrying same rate of depreciation. Categories means what? We have only 4 categories of assets. We have only 4 categories: intangibles, buildings, furniture. Any other item is a plant and machinery. Any other asset is a plant and machinery. Now under plant and machinery, we have various other categories. I will show you. Under plant and machinery, we have 30% block is there, we have 45% block, we have 40% block, we have 20%, we have 15%. Most important in exam is 15% block, 40% block is important. What all comes under 40% block? Especially computers, including computer software and computer printers. Computer printer is eligible for 40% rate. Remember this. Okay. Books eligible for 40%. Renewable energy devices, windmills and solar panels 40%. Pollution control, all that 40%. Aeroplanes and engines 40%. All sea vessels, all ocean related, water related vehicles 20%. Road related vehicles 15%. Straight away. Getting it? Now any other furniture, they are all eligible for straight away 10%. Building straight away eligible for 10%. Water supply treatment, temporary wooden structures building 40%. Building used for residential purposes and all 5%. Suppose if a building is used for staff quarters, on that you can claim only 5% depreciation. You cannot claim 10% depreciation. As simple as such. Clear? So depreciation is completed majorly. Additional depreciation is eligible only for new plant and machinery which is acquired and installed, and does not include second hand machinery, does not include machinery installed in office or residential premises because it is not used in manufacturing process. Office appliances is not eligible. Ships, aircrafts, road transport vehicles, all transport vehicles not eligible. Any machinery which is on which 100% depreciation, 100% deduction is possible, no, that is also not eligible for additional depreciation. Remember, additional depreciation is something that is to be reduced from block of assets. That is why this logic is this, that is why this kind of condition is given. Fine. Anyhow, what is the rate of additional depreciation? Directly 20% of the actual cost. Whatever the purchase price is now, on the 20% directly actual cost. And further, if new machinery is used for put to use for less than 180, only 10% additional depreciation is allowed in the current year. Balance 10% is allowed in the next financial year. That's why in the additional depreciation, if you see the format of additional depreciation, I have given you 4. balance AD to be claimed. This format, if you remember, you will never you will never do a mistake. Always remember concept, you should remember problem solving structure also you should understand. Both if you understand only, you will do a problem without a mistake. Some students focus only on the concept but not on the structure of solving the problem. Structure is important. You will never understand the structure by solving tens and hundreds of problems. Structure of the problem, the moment when you're thinking about the provision, at the time itself you should think about at what structure you should solve. I hope every one of you understood depreciation now clearly, how to compute depreciation. Especially, sir, how did we got 10 lakh 50? How this 10 lakh 50 is allocated here? 4 lakh is not used, 3 lakhs is for less than 180, 3 lakh 50 is for remaining balancing figure. Why we allocated like this? Entire logic I told. I hope every one of you understood depreciation correctly. Just give me a confirmation. Just give me a confirmation. I'll proceed further. Major topic depreciation is over. Deductions, in the deductions major topic is depreciation, and that is over. Just reply me on the live. I'm just waiting for your message. Yeah, got clarity? Perfect, thank you. Next I will go to actual cost. Now I told you, right, in depreciation, no, opening balance is different, WDV is different. WDV as on 31st March, if at all they give, immediately you should see, is it before depreciation or after depreciation? If nothing is given, that's a before depreciation value. That's a before depreciation value. Getting it? I will share this PDF in the Telegram group. Kindly wait. Okay. So once the class is over, in some half an hour or 40 minutes, I will share it in the Telegram group. Okay. So now in depreciation opening, so WDV as on 31st March is given. No words after depreciation. That and all word is not there. Then that's before depreciation. Minus 15%, 20%, 40, whatever it applicable. Then you will get closing value after depreciation. That is opening value in the current year. This is where many students do mistake. They think the depreciation calculation is right. Suddenly when they see the suggested answer, how come they calculate like this? Because WDV as on 31st March, if at all it is simply given like this, it is always before depreciation. It is not after depreciation. That's it. Next, what is actual cost? Actual cost is something, any machinery you purchased, any asset you purchased, what is actual cost you should first decide. In this, some explanations were there. Suppose, no, there is one important explanation one. If asset is used for business, after he is using it for scientific. So originally I purchased for scientific research. There I claimed 100% deduction. Now I brought into a normal business. I will add into block of asset that asset. At what price? Nil. Actual cost minus deduction allowed under 35, which is generally nil. Sir, I am converting inventory into capital asset, sir. It's actually a stock in trade, sir. Now I want to use it as part of, I'm a furniture shop, sir. Mine is a furniture shop. I manufacture furniture, sir. This I will sell to customer generally at 1 lakh rupees. But this furniture, I am using it as part of my, whoever is coming, customers, no, visitors, no, for their seating purpose I am using it. As an office furniture I am going to use it. If inventory is converted into a depreciable asset, if the inventory converted into a fixed asset, then in the block, no, furniture block, how much you will add? Fair market value on the date of conversion. Fair market value means what? At what price you sell to customer, that value you will add it. So remaining not that important, directly 8th one. Sir, I borrowed a loan. I borrowed some loan for purchasing a machine. Until the machine is used, until the machine is installed and ready for use, whatever interest expenditure is there, that will be added to block of asset. Interest expenditure up to asset first to put to use, that is added to block. Explanation 5. If at all any building brought into business, some building is a that I brought into business. Now I need to add that building in the block, right? I purchased this building, constructed this building for 10 crore. Don't add 10 crore. Actual cost is how much? 10 crore, right? Minus notional depreciation. What is notional depreciation? Very simple. Until last year, this year you added in the block, right? Until last year, how many years you have used the building for some other purpose? 5 years, sir. For 5 years, WDV basis, calculate depreciation on that building. 10 crore minus first year 10%, then 9 crore minus 10% second year, 8.1 crore third year, minus 10%, 7 point something, minus 10%, 6 point, minus 10%, some 5 point something, or maybe 5.9 like that. So calculate the opening value of that building for the current year after reducing notional depreciation. That value add it in our block. In the last September 24, no, the owner has brought car into business. The owner has brought car into business. Car he purchased 10 years, some 5 years ago at some 20 lakh. That he brought into the business now after 5 years. Rate of depreciation 15. At what price it should be added in the block? Original cost only. You see here, actual cost What is it? Actual cost minus notional. No, I striked it. Only actual cost. Only if it is building, used for some other purpose, bringing into business, then notional depreciation I'll reduce and then add. Remaining my personal assets, bringing into business, at what price I purchase, same price I will add. Remember this point. Next. That's it. In this mainly 1, 5, 8. These are the main explanations day before exam. Actually, everything is important, but this is enough. This is enough. Then return down value. This is not required. Okay, it's easy only. Then carry forward and set off of depreciation. I will discuss this in set off and carry forward of losses. Now it is not relevant. Okay, right now in PGBP level it is not relevant. Now the next deduction, 30 we completed, 31 we completed, 32 we completed. Okay, 35. What is 35? Under 35 you have expenses. 35 section itself is dealing related to scientific research, social research, all that. R&D related, nothing but. Suppose if the SSC is incurring directly on his own, 100% deduction under both the regimes. Directly he is spending. By the way, in depreciation, default tax regime, one provision is there. Additional depreciation you cannot claim under default tax regime. Additional depreciation you cannot claim under default tax regime. And if at all in the current year you are choosing default tax regime, whatever brought forward depreciation is there, right? In that brought forward depreciation, brought forward additional depreciation component is there, right? You cannot further carry forward, right? Add back to the block. Add back to the block. What is it? Add back to the block, because you are choosing default tax regime. That's it. That's the adjustment. Okay, fine. So scientific research. What is scientific research? Two ways you can spend this. Either you incur directly or you donate. Donations for scientific research, no deduction under default tax regime. Suppose, sir, I am not donating to anybody, sir. I am only incurring on my own. I have a R&D department is there, research and development. I have every day, every month, some new projects will start, will be developing products, some expenditure will incur. What about this? Anybody can claim deduction. Optional tax regime, normal tax regime, anybody can claim deduction if it is directly incurred. So directly incurred means what? Whatever. Suppose, now one more thing. Suppose if your company is doing R&D. Suppose if your company is incurring directly, they are spending directly on scientific research, the expenditure must be related to business of the SSC. You cannot do research on some other which is not related to your business. So current year expenditure is fully allowed as deduction, 100%. Further, before you start the business, before commencement itself, you started R&D first. Past 3 years expenditure revenue is also allowed. Only salary and material cost is allowed as deduction. Capital expenditure, current year capital expenditure is allowed as deduction. Current year whatever capital expenditure, same way past 3 year capital expenditure is there, right? That is also allowed as deduction. Depreciation on the same expenditure cannot be claimed. Whatever capital expenditure you are claiming 100%, you cannot claim. And no deduction for land. Building cost, whatever is there in R&D purpose, fully deductible. And if a building is used for R&D, scientific research, later converted into a normal building, then what is the cost to be added in buildings block of asset? Zero. Explanation 1. Actual cost minus the notional actual cost minus deduction under section 35. That's it. And unabsorbed capital expenditure. This unabsorbed point I will tell you. Unabsorbed depreciation, unabsorbed capital expenditure on scientific research, unabsorbed family planning expenditure, unabsorbed business loss. In all these 4 cases, it is carry forwarded indefinitely. We will discuss that in set off and carry forward adjustment. Next. Suppose, sir, I purchased some assets for scientific research, sir. I removed them now. From scientific research, I removed. What you removed? You sold directly. If you sell directly, the amount is taxed as deemed profit under 41 subsection 3. Remember, 41 subsection 3 is different. 43 subsection 1 explanation 1 is different. Previously what I told you is explanation 1 to 43 subsection 1. That is different. 41 subsection 3 is different. What is 41 subsection 3? Suppose I purchased some, I spent some capital expenditure on scientific research. That asset, machinery, furniture, building, whatever is there, that I removed from scientific research. R&D department, I removed it. What you did after removing? You sold it. If you sell, whatever sale proceeds is there or whatever deduction claimed earlier, no, lower of it is straight away taxable under deemed profits. Lower of the sale. Suppose, no, I purchased scientific research building 10 lakhs and I claimed 10 lakhs deduction. Now I sold it for 4 lakhs. Sale proceeds 4 lakhs. Deduction claimed 10 lakhs. Whichever is lower, 4 lakhs is taxed as deemed profit under 41 under PGBP. Simple. Then, sir, I didn't use it, sir. The same is brought into normal business, sir. In that building, no, we removed all the scientific research equipment. We are using it as a call center, sir, for our customers itself. Okay, that time the same will be added to block. At what price? Nil. Explanation 1 to 43.1. That's it. Indirectly, here no retaxation. If you sell it, only retaxation. That too how? You sell it directly without using into for business you are selling. Suppose, no, I brought into business, sir, after bringing into business, after adding into block, now I sold, sir. It is treated as sale of part of a block. It is treated as what? Sale of part of a block. Are you clear? Now again, here depreciation related one logic I want to tell. Suppose, no, here question, if you see, a minute. So depreciation, if you see, capital gain section 50 also I will cover. Section 50 also I will cover right now. What is section 50? Suppose, no, opening WDV is 10 lakh plus additions during the year is some 15 lakh. So gross block value is 25 lakh minus part of a block is sold. What is it? Part of a block. You know at what price we sold? 40 lakhs we sold. If part of a block is sold for more than opening plus additions value, if part of a block is sold for value which is higher than opening and additions, nothing but which is higher than block, the difference 15 lakhs extra you are getting it, right? Straight away it is short term capital gain. In that year, no depreciation. That's it. No depreciation at all. We will reduce the block value to 0. We will reduce the block value to 0. No depreciation. Why? In order to claim depreciation, there must be asset in the block. In this case, asset is there. There must be value in the block. Value is not there because value after reducing sale, the value cannot be negative. It can only be 0. Sir, what about excess sale, sir? It is straight away taxed as short-term capital gain. Suppose part of a block only sold for 10 lakhs only. 25 lakhs is the value of the block. Part of a block is sold for 10 lakh. 15 lakhs value is there. Asset is there. You will calculate depreciation. No capital gain. Sir, full block I sold, sir. 25 lakhs is a gross block value, sir. Opening plus additions is equal to 25 lakhs, sir. Full block I sold. What is it? Full block I sold. If I sell full block, 10 lakhs is the sale price. Full block you sold. Can I claim depreciation? Yes, sir. 25 minus 10, 15 lakh balance value is there. But where is the block? Where is the block? So, you know, block 25 lakhs worth, you sold it for 10 lakhs. 15 lakhs is treated as short-term capital loss. Sir, full block I sold for 30 lakhs, sir. Full block I sold for 30 lakhs. Full block you sold, you can't claim depreciation. So enter 25 minus 30 is equal to 5. Whatever extra you are getting no sale, short-term capital gain. That's it. This is a section 50 versus 32. Either 50 will apply on a particular block or 32 will apply on a particular block. Both will not apply. For a particular block, either you can calculate depreciation or you can calculate short-term capital gain or short-term capital loss. That's it. Remember, full block sold, short-term capital gain, short-term capital loss. That's it. Part of a block is sold, short-term capital gain or depreciation. Only these two possibilities are there. That's it. Are you clear with respect to capital expenditure? All that scientific research expenditure directly incurred by the SSE, revenue expenditure, capital expenditure, sale of asset used for scientific research directly without using it for business, say, you know, using it for business, what to do, and block of asset, you know, depreciation, all that everybody understood. Tax selling, sir, in setup and carry forward amendments are there where we in SOP cannot claim interest, and in LOP, DLOP we can, but cannot inter and carry forward is not allowed. I think that's wrong. That's not an amendment. Show me the act itself. There is no amendment happened in the Finance Act 2023. One time amendment happened. Later on, default tax regime is not touched. Only one time it is touched to modify the rates. The rates of default tax regime is changed. That too for the May 24, May 25. Don't interpret provision based on the solutions given in the ICAI book. Always interpret based on the provision of the law. See, very simple. In default tax regime, If you cannot claim deduction, you can't carry forward that. As simple as such. If you can claim deduction, you can absolutely carry forward that. As simple as such. Carry forward of house property loss for LOP and DLOP, you can absolutely claim. Not an issue at all. ICAI has given a wrong answer. That's wrong. Many people are interpreting based on the answers given, but not based on the provisions. Interpretation should be based on the provision. ICAI book sometimes give wrong answer. That's it. Next. I hope you are all clear. Actually, I think I have cleared your doubt. Then 35. Oh my god, it's already 50 minutes. We have another half an hour to 40 minutes, 1.5 hour maximum PGBP time. More than that we should not spend. Okay, now donations. Scientific research donations are what? Scientific research, suppose you are donating to research association for scientific, 100% deduction. Sir, you are donating to some Indian company whose main objective is scientific research, 100%. You are donating to research association for social research, 100% deduction. You are donating to laboratory, IIT, specified person who are carrying some program under 2AA, 100% deduction. Remember, deduction is allowed even after you donated, their permission was lost. That doesn't matter. At the time of donation, their permission is there. That's enough. You will get a deduction. These deductions, these are all donations. They are allowed only under optional tax regime. They are not allowed under default tax regime. That's it. That's it. Then 35 AD. 35 AD means what? 14 specified businesses were there. 14 specified businesses. If at all the SSE is involved in doing any of these 14 specified businesses, he can claim 100% deduction on capital expenditure incurred. Revenue anyhow he will claim. But for capital expenditure also he can claim 100%. Capital expenditure means what? Except land and goodwill. Except land, goodwill and financial instrument. Nothing but shares and securities, land, goodwill. Except these, rest all other building cost, everything can be claimed as deduction 100%. Only one condition. Major condition is what? Major condition is what? It must be a newly started business. The specified business must be newly started. It should not be established because of a demerger, split up like that. It is newly started. In that, up to 20% of the machinery can be second hand. Up to 20% of the machinery can be second hand. 80% minimum should be altogether new. Now, further, second hand machinery means what? If it is not used in India, that's enough. It's a second hand. It's a new machine. Somebody used outside India, not an issue. Only two conditions. It should not be used in India. On that, depreciation under 32 should not have been claimed earlier by anybody. And from income tax point of view, that asset is used completely outside. In India, it is not used. Nobody has claimed deduction. Then that's a new machinery. New machinery must be how much totally? Minimum 80%. Up to 20 can be second hand, not an issue. Further, most important condition. Now you are claiming deduction, right? Just a minute. You are claiming deduction, right? You are claiming deduction, right? For a capital expenditure. Capital expenditure means what? Furniture, plant and machinery, buildings, all that. These capital assets must be used for specified business only for a period of 8 years. Minimum 8 years you must use. If at all you are not using it for 8 years, before 8 years you are using it for some other purpose. Before 8 years you are using it for some other wrong usage. We call it as what? Wrong usage. If at all you are using it for some other purpose, if the asset is used for a purpose other than specified purpose within 8 years, then whatever deduction we claimed earlier when we used it for 35 AD, add back. It is treated as income minus any depreciation that is allowed under 32. If at all I didn't use it for specified, in the past 5 years I used it, let us assume for normal business, I would have got normal depreciation. No, reduce notional depreciation. Actual cost minus notional. Balance income, no. The balance will be treated as business income. Moreover, that amount whatever is there, no, the same is added to the value of the block. So it is treated as a value of the block. It is treated as income. In that year it will be treated as income and added to the block. That's it. What value? Deduction claimed earlier minus notional depreciation. Notional depreciation means what? If the asset is used for normal business from day one, we would have got 15%, 10%, some rate we would have got. No, reduce all that. Notional every year. Return on value method. As if that the asset, as if such asset is the only asset in the block. Calculate WDV and add it to the block. Treat it as income under the head PGBP. Remember, I am not talking about sale. I am talking about usage within 8 years for some other purpose. Sir, what about the asset is sold, sir? Not about usage. It is sold, sir. Charging section straight away says 28 charging section. Whatever sale proceeds is, sir, fully taxable as business income straight away. Suppose I purchased an asset for specified business. I sold it. Sir, when you sold it, within 2 years, within 3 years, within 5 years, 8 years, 10 years, what? No such time. I purchased for specified business. I claimed deduction. Now I sold it, I got some money. Whatever money you got, it's a PGBP income straight away. That's it. No time limit, nothing. That's it. 35 AD is completed. 35 AD is completed. Preliminary expenditure. I am not talking what is preliminary, all that. Whatever preliminary expenditure is there, it shall not exceed, preliminary expenditure total amount shall not exceed 5% of the cost of the project for SSEs who are not companies. For companies, calculate 5% of COP, cost of project, 5% of capital employed, whichever is higher. Let us assume 5% of cost of project is 5 lakhs, 5% of capital employed 6 lakhs, whichever is higher means 6 lakhs. Company actually sent preliminary expenditure 8 lakhs. Eligible expenditure is only 6 lakh. Same cost of the project, let us assume here also 6 lakhs for other SSEs. So eligible preliminary expenditure is how much? 6 lakh. Now, can I claim deduction in the business year commencement, in the year of commencement, or in the year of expansion? No, don't. 6 lakhs is divided into 5 installments. Every year 1.2 lakh you can claim. That's it. Remember, preliminary expenditure can be incurred either. Preliminary expenditure can be incurred at the time of commencement of the business or at the time of expansion thereof. At any time you can incur preliminary expenditure. If it is expansion, which year it is expanded actually, from that year you can claim deduction in 5 installments. If it is commencement, which year it was commenced, from that year you can claim deduction in 5 installments. Preliminary expenditure cannot exceed whatever actual amount is there. It should be less than or equal to 5% of COP for normal SSEs, 5% of COP or 5% of COE, cost of capital employed in case of companies, whichever is higher. That's it. Clear? I'm not talking about what is preliminary expenditure is included, all that. 35 DDA, you know, this is regarding payments made to employees under VRS. Under VRS, whatever payment is made by the company, so that's an expenditure that is allowed as deduction in 5 installments. Over. That's it. Next, deduction under section 36. What are the deductions? Stock insurance premium, fully allowed as deduction. Employee health insurance, it must be paid in other than cash. It must be paid in other than. Employee insurance premium alone, it must be paid in other than cash. Insurance against plant and machinery, what about that, sir? 31 is silent on that, 36 also silent on that. That's why you can claim it under 37. Interest on borrowed loan, suppose I borrowed loan some for business, OD, cash credit and all, and I'm paying some interest, you can claim deduction. However, if the loan is used for acquiring fixed asset, then it is added to actual cost. Discount on zero coupon bond, I hope you're aware of this. I'm not focusing on this. You know, contributions to welfare funds. What is it? Contributions to welfare funds. Here there, okay, I'll do one thing. Contributions to welfare funds, I will come back to later. This point I will cover. Contribution to pension scheme under 80CCD. Contribution to pension scheme under 80CCD is allowed as deduction up to 14% of salary. Up to how much? 14% of the salary. Remember, company is contributing to national pension scheme of the employee. It's an expenditure for the company. How much a company can claim? Whatever you contribute, you can't claim. 14% of salary only a company can claim. What is 14% of salary? Salary means what? Basic plus TA, which is given for retirement. Remember, commission is not there here. That's it. And remember one point here. Whatever company is contributing, no, on my name, suppose I'm an employee, my company is contributing. For that, it's an expenditure, deduction. For me, it's an income. Under 17, it's treated as income. Again, I will get deduction for the same under 80CCD subsection 2. That's it. Remember that. Okay, remaining employer contribution to gratuity fund, especially this employee contribution, I will discuss it in 43B. I will discuss these points in 43B. Remember, at 43B, fantastic discussion is there. There I will cover. Then bad debts, very important adjustment. Bad debts. Just give me 1 minute. Oh, almost it is 1 hour. Just a minute. One small point, one small correction. This is 14% as per the May 25 exams. Previously it is 10% only. Please make a note. Please make a note. I mistaken it all. It's actually 10% for Jan 25 exams. For May 25 onwards only it is 14%. A student has asked me, immediately it was striked. Okay. Sorry. So for Jan 25 exams it is 10% only. Naresh, I hope I clarified you. Yeah. Yes. Bad debts. Bad debts. Bad debts can be claimed as deduction only if it is actually written off in the books. Write off must be there in the P&L account, debit must be there, debtor must be transferred to P&L account, write off, only then it is allowed as deduction. Or sometimes no, we can't write off because of some reason, we can't write off, but it is irrecoverable, it is proven, it is irrecoverable, then also you can claim it as deduction. Bad debt will be claimed as deduction under two circumstances: either it is actually written off or it becomes irrecoverable. Okay, now further, if the debt that's it, just a minute. If assessing officer does not allow deduction in full, suppose no, I claimed 10 lakhs bad debts, later income tax department opened my case, in that no, assessing officer added back 5 lakhs, means he didn't give me 10 lakhs deduction, he gave me only 5 lakhs, 5 lakhs is disallowed. Then late, because no, he asked me what's the proof that 10 lakh bad debt, I showed him, he's not paying, no, that and all I will not agree, he may pay next year, who knows. On that logic he disallowed, later on no, he became insolvent, court declared him as insolvent, none of his debt can be paid. Now I went and showed this proof to assessing officer, see, now he is insolvent. Now tell me, what about balance 5 lakhs? I actually incurred 10 lakhs bad debt, you allowed me only 5 lakhs. 5 lakhs you disallowed me. Now what about that? Okay, then 5 lakhs you claim now. Logic. Further, recovery of bad debt. What about recovery? So when I incur bad debt, when I write off or when it becomes irrecoverable, I'm claiming deduction, right? Later I recovered. How much is taxable? Recovery is taxable. You see the provision here. Recovery is taxable only to the extent of net deduction allowed earlier. Net deduction means what? Sir, I claimed earlier 10 lakhs, sir, but at the assessing officer allowed only 5, sir. 5 lakhs only net deduction I got, sir. Now I recovered 5 lakhs, sir. Total debt 10 lakhs, sir. Assessing officer, I wrote off 10, sir, because I didn't get single rupee, but assessing officer disallowed 5, sir. Indirectly on 5 lakhs I paid tax, sir, even though I didn't recover. Getting it? Now I recovered 5 lakhs. This 5 lakhs already I paid tax, so nothing is taxable. If I recover 7 lakhs, 2 lakhs is taxable. If I recover 10 lakhs, 5 lakhs is taxable. If I recover 11 lakhs including interest, 6 lakhs is taxable. Sir, ultimately court settlement, sir, 4 lakhs only recovered, sir. 10 lakhs is a bad debt, sir. Assessing officer allowed only 5, sir, but I recovered ultimately 4, sir. Still 1 more lakh loss is there. That 1 lakh I will claim it as an additional deduction in the year of final settlement. To best of my knowledge, many students don't know this provision. Many students don't know this AO related point. They all allowed, not allowed, that to that level only they will always study, which they don't understand. Allowed means what? Allowed by assessing officer. Because of 36 subsection 2 clause number 3, 99.99% I'm sure many students don't know this provision. I hope now you understood this. That's it. I already clarified regarding 36 subsection 1, 10%. Okay, I clarified it just. Then family planning expenditure. Family planning expenditure is allowed only as a deduction for company assessees. Only for company assessees it is allowed. That too, capital nature family planning is allowed in 5 installments. If a family planning is revenue in nature for that company, full deduction. Capital in nature, 5 installments. That's it. Then residuary. Now we discussed under 30 buildings, 31 plant and machinery, 32 depreciation, 35 scientific research expenditure directly incurred contributions. Contributions you can't claim under default tax regime. The additional depreciation you can't claim under default tax regime. Under 36 some expenses we claim. Suppose if the SSC is incurring any business expenditure other which are not covered here, you can claim here. You can claim under 37. Salaries you can claim deduction here. Printing and stationery you can claim deduction here. Telephone expenses you can claim deduction here. Only few conditions. It should not be personal, it should not be capital in nature, it should be 100% related to business. Remember, any penalty you are paying because of violation in law, you will not get deduction. Any bribe you are paying, you will not get deduction. Any expenses that are offensive, that are unauthorized, that are illegal, you will never get deduction for that. That's it. Penalty you will not get. Sir, GST I paid late, sir. On that interest I am paying, sir. That is allowed as deduction. Huh? Yes, interest on late payment of indirect taxes is allowed. Interest on late payment of income tax, No deduction. No deduction for income tax, no deduction for advance tax, no deduction for 234A, 234B, 234C, 234E, 234F. No deduction at all. Any amount you are paying under Income Tax Act to the Income Tax Department, no deduction at all. Any amount you are paying to GST Department, all that because of late payment, which is compensatory in nature, allowed. Any payment you are paying under any law, which is penalty in nature, not at all allowed as deduction. That's it. 37 over. 37 is over. Now we need to discuss inadmissible expenses. Inadmissible. What are inadmissible deductions? What are deductions which are not allowed as deduction? 2 minutes time, please. I just one small call I have to attend. Just 1 minute, okay? Kindly. Hello. Yes, sorry. Yeah. We'll continue the discussion. Inadmissible deduction. Inadmissible means what? Very simple. We have discussed so many, right? 30 to 37. So many deductions were there, right? You cannot claim them if you do not satisfy the following conditions. Remember, from disallowances, it is even most important, because the first disallowance I am talking about is 40 subsection A clause 1 and clause 1A. You see the heading I have used, so clearly I have used. Here, disallowance will attract because tedious provisions you are not complying. Because tedious provisions you are not complying. What is the disallowance? Disallowance in the relevant year due to non-compliance. First, this section has a 3 parts. This 40A 1A has 3 parts. 1, disallowance in the current year because of tedious non-compliance. Subsequently allowed in later year. Subsequently allowed in later year because you are subsequently complying. Sometimes even though tedious provision you didn't comply, we assume it as you complied. Means this disallowance section will not attract. That is 1. By the way, we have disallowance sections, right? I will categorize these disallowance sections into 2 types. I will categorize them into 2 types. What are they? 40 subsection A, 43B. These 2 are one batch. 40A subsection 2, 40A subsection 1, 40A subsection 3. Till we have, that's it. These are the main. This entirely is one batch. What is the difference? In the second batch, if disallowance is there, it is permanent in nature. Again, once again, later reducing, that logic is not there. Here, if you disallow, this financial year, this assessment year, it is disallowed. Later, if the SSC rectified the problem, again he will get a deduction. This is a temporary disallowance. This is a permanent disallowance. I hope very few of you would have paid attention to these 2. These 2 sections disallowances are different. These different disallowances are different in nature. Now I am talking about 40A. So what is 40A? Suppose you are liable to deduct TDS, but you didn't deduct. You did not deduct in the current year, or you deducted but not remitted. Within what time? Within the 139 subsection 1 due date. 31st October in case of audit cases, 31st July in case of non-audit cases, 30th November in case of transfer pricing cases. You didn't remit within due date. You deducted but not remit. Remember, some expenditure you paid. On the TDS is liable. Some expenditure you paid on the TDS is liable. You have to deduct in the current year and pay the TDS amount to the department by at least due date for filing IT return. Suppose you didn't deduct at all, or you deducted but not paid within the due date. That to whom you paid, non-resident. To whom you paid? Non-resident, non-corporate, or a foreign company. Nothing but any non-resident. You paid some amount to any non-resident. Straight away 100% is disallowed. What are the payments? Interest, royalty, FTS, or any sum, whatever amount that is taxable under income tax. Sir, suppose if the payment is made to resident, sir, 30% only disallowed. If the payment is made to resident, it is 30% only disallowed. Remember, payments which are made outside India, 100% disallowance is applicable, because 40A1 talks about two payments: payments made outside India or payments made to non-residents or non-resident foreign companies in India. In India, you might have paid to non-resident, or payment is made outside India. If payment is made outside India, to whom you are paying doesn't matter. You are paying outside India. 100% disallowance if at all TDS provisions you fail to comply. 30% disallowance in case if it is paid in India to a resident, then 30% only disallowance. Okay, sir. Subsequently, what I did is, in the last year, 23-24 financial year, I spent money, sir. For that year, I didn't deduct, sir. Or I deducted and I failed to remit, sir. Later I remitted, sir. Later I deducted and remitted, sir. What about then? Suppose TDS is deducted in relevant year. TDS is deducted in original 23-24, but not remitted. What about that? Disallowed for relevant year. As I already told, 100%, 30% disallowed. Ultimately allowed as expenditure in actual year of remittance. Whenever you are remitting TDS is there right to the department. Suppose I actually 23-24 year I deducted. I am supposed to remit by 31st July, which is the due date, but I didn't remit. I remitted it on 31st October 2024. After due date I remitted. When I remitted to the department 31st October 2024, 24-25 year I remitted. Indirectly I will claim it as a deduction in that year PGBP computation. That's it. Okay, here 139 due date is irrelevant. Subsequently 31st October I am remitting. No, that time 24-25, what is its 139? That and all irrelevant. Due date concept I will check only for the relevant year for which the expenditure belongs to. Later if you remit, whenever you remit, for which year you remitted, that year you will get deduction. Sir, suppose I didn't deduct in relevant year, sir. I did not deduct it at all. Then disallowed for relevant year. Ultimately allowed as expenditure in the year of deduction and remittance. When you ultimately deducted, sir, I deducted in November month, sir, after due date. November month I deducted, December I remitted, sir. 24-25 November you deducted, December you remitted. Means ultimately remittance is happened in 24-25. For that year you can claim that 100% or 30% which is disallowed. Over. The provision is majorly over. Repeat once again, listen once again. Sometimes you failed. You have to deduct and not deducted. You deducted but not remitted. But what happened, on the other side, the person who received this money, he furnishes a return of income. He included the amount which you paid. Whatever money you paid, he included honestly to the department. He paid tax also. And you have a certificate that he paid everything properly. Sir, you punished me, 100% disallowed, 30% disallowed, because I didn't deduct income tax department, tax evasion happened, all that reason you punished me, right? Now don't worry, sir. The SSC to whom I paid this money, he filed return, he showed my income, he paid tax also, you see now. Whenever he filed the return, that date of filing the return, that is treated as TDS is deducted during that date. Accordingly, suppose 23-24 I paid salary to some resident employee, 30% disallowed, sir, because I didn't deduct TDS. But this resident employee, in 24-25 financial year, because 23-24 means assessment year 24-25. For this year, 31st July or 30th October, somewhere he filed the return, sir. The salary which I paid is included, sir. He paid everything. So he filed return on 31st July, right? 31st July is treated as 31st July 2024 is treated as date of deduction. If it is treated as date of deduction and date of remittance, I will get 30% disallowance for 23-24. I can claim that once again as a deduction for 24-25 previous year in PGBP income computation. Over. 40 subsection year clause 1 is over. 40 subsection year clause 1A is over. I hope everybody are thorough, understood on this. Just give me once reply. 40A1, 40A1A, everybody understood or not? Have you got clarity? Yes. I just want to know, do you also have clarity this much earlier, or now you are getting better clarity? And I think you might have felt how productive this revision is than you reading on your own. Thank you, thank you. Thank you, Alok. Perfect. We'll proceed to the next one. Suppose if a company is paying tax On employees related non-monetary perquisite, for the company it is disallowed, for the employee 1010cc exemption he can claim. That's it. Remaining are not that important. Okay, next 40b section we have to discuss always at last. Remember, once we complete 40a subsection 3, 43b, then we will come back and discuss 40 subsection b. This because there is a one beautiful point I will tell you. Many students don't understand firm related book profit computation. Every time you might have done book profit mistake, correct na? I will come back and tell you, crux I will tell you, don't worry. Now next, first I will cover 40a subsection 3, 40a subsection 3a. By the way, tell me, we can claim expenses on what basis? Whenever we can claim expenses on generally what basis? Accrual. Suppose 23-24 financial year, 23-24 previous year, I accrued some expenditure. Fine, happy, no problem at all. Subsequently, I paid it in cash. You accrued expenditure and you claim it as deduction. For 23-24 year, you accrued and you claimed it as deduction. Getting it? Remember 40A3, an expenditure is not allowed as deduction if the payment is made in more than 10,000 to a single person on a single day. If that expenditure is more than 10,000 on a particular day, that too you incurred by other than account pay, bank draft, prescribed electronic modes. Other than these three modes, like you paid through bearer check, you paid through bearer DD, or you paid in cash. Whatever amount you paid is fully allowed, fully disallowed under 40A3. Sir, I have a query. What about 23-24? I only spent money, sir. I didn't pay it. But next year I paid it in cash, fully in cash. 50,000 I spent in current year, sir. But next year I paid in cash. If next year paid, for 23-24 previous year, no disallowance. For 24-25 year, you paid no in cash ultimately, for which you claim a deduction, right? That is treated as income. That is treated as income. An expenditure which is allowed as deduction under accrual basis in the past year, and the same is paid in the subsequent year in other than prescribed mode, then that amount will be treated as income. In the recent exam, in the recent September 24 attempt, 40A subsection 3, 40A subsection 3A, 43B, this together they asked. Every student did wrong answer. Every student did a wrong answer on that. 43B, I'm explaining. Little while later I'm explaining. There I will tell you. Now, so for transport operators, suppose if you are paying the expenditure to transporter, how much limit? Up to 35,000 you can pay in cash. But the moment it crosses 35,000, it is disallowed. By the way, remember, in 23-24 expenditure is there. In that year only I paid. Then only this disallowance will attract. Suppose 23-24 I spent money. I incurred expenditure. Accrual basis. But I paid in cash in the next year. 23-24 it will not be disallowed in the PGBP. No adding back. That will be treated as income of 24-25. Remember this point. Next. Bank holiday exceptions I'm not talking. Okay. Gratuity 40A subsection 7. Gratuity 40A subsection 7. Provision you created, you will not get deduction at all. No deductions for provisions under income tax, reserves, provisions, no deductions, only actual expenditure. Opportunity cost, no deductions, nothing. Provision is disallowed. However, contribution you made amount you contributed to a gratuity fund which is created on behalf of employee, that is allowed as deduction subject to 43B. Provision for gratuity that is becoming payable during the year. Suppose you created a provision, that amount is actually for what, in this year you are going to pay to the employee, provided that payment is paid within the due date for filing IT return. 43B again, that 43 logic is applicable again. So for these two payments only, if you create a provision, you will get a deduction. Then no double deduction. Okay, 23-24 you claimed provision, later you paid. Once you claimed deduction for provision, right? That from provision only you paid later year, no? Why you will get, will you get deduction again in the payment year? No, that's it. Contribution to unrecognized funds. I paid contribution for on behalf of my employee. I paid some fund. I paid some amount on behalf of my employee to some fund that is not recognized by income tax. No deductions at all. Deemed profits, it's very easy. I'm not covering it. It's not a big deal. Okay. So 43 also not relevant. 43B very important. 43B, we are left with two more disallowances. 43B, 40 subsection B, assessment of firms. Two more disallowances. Just 2 minutes. Almost 1 hour 20 minutes. I think another 10 minutes to 20 minutes it will take. Somebody asking, is it okay to leave capital gains? If possible, watch my revision class on capital gains. You will get very good clarity. Yes, I'll proceed. 43B. What is 43B? This section is applicable to an SSE who is following accrual basis of accounting. This section is applicable to an SSE who is following accrual basis of accounting. What does it mean? Accrual means what? Any expenditure you can claim deduction if you incur it. That's enough. If you are incurring, that is more than enough. You need not actually pay it. If you incur, that's enough. When you pay, department will never ask you question. However, the following 7 expenses, you see, six expenses I have listed here and 1 expenditure I have listed here. The following total 7 expenses, the following total clause number H and up to clause number G, getting it, F up to clause number F, totally 6 and this one, totally 7 deductions, 7 expenses. You can get deduction only if they were paid. Deduction linked with due date, nothing but deductions. You know, these expenses, the following expenses incurred in current year are allowed as deduction only if they were actually paid on or before due date for filing returns. These 6 expenses are linked with IT return due date, but 1 expenditure no. Payment, any expenditure payable to a micro enterprise or small enterprise. Medium enterprise is not covered, my dear. Remember, medium enterprise is not covered. Any amount payable to micro and small, getting it, which who are covered under MSMED Act, is disallowed if it is not paid within credit period allowed. If it is not paid within credit period allowed under the law. What is the credit period? Sir, there is no written agreement, sir. Then credit period is 15 days. Sir, written agreement is there. Credit period is 45 days. Credit period is 45. Suppose, you know, very simple, very simple. 10th March, 45 days logic I will take easily. 10th March, I purchased some goods from micro and small enterprise. 10 lakhs is the price of the goods I purchased for. I must pay this within 45 days. 45 days means approximately 25th April it will come. To a 10th March 2024. 25th April 2024 is the due date. Within 25th April 2024, if I pay within this date, no problem. Whatever 10 lakhs I debited to P&L, no. Whatever 10 lakhs, as it is I can continue. I can claim deduction, no problem. Sir, as on 25th April also, this 10 lakhs is outstanding, sir. Then for the current previous year 23-24, it is disallowed. 10 lakhs is added back. Sir, but I paid this within 139 subsection 1 IT return due date, sir. 31st July I paid, sir. Doesn't matter. You will not. This disallowance will be there for sure. You paid, okay. If you paid in which year later? You paid in 31st July, right? You paid on 31st July, right? Which means it will come under 24-25 year, right? For that year you can claim deduction. Simple logic. This is for micro and small payments. Payments payable, expenses payable to micro and small enterprises which are covered under MSMED. Credit period 15 days, credit period 45, as the case may be. If there is no agreement, 15 days. If agreement is there, 45 days is the maximum credit period allowed. Within the credit period, if you make the payment, then for the relevant year in which you incurred, no, you can claim deduction. If you make payment after credit period, you will not get deduction for the relevant year. You will get deduction in the actual year of payment. So that's the provision you see. Further, if the amount is paid subsequently after the credit period, then deduction will be allowed only for the actual year of payment. Now, in the recent exam, no, September 24, 43B, this point, 48.3, 48.3A, fantastic adjustment. What they gave, you know, again, I think now I am understanding, like institute want to test really the conceptual clarity of the students. In the last September, many students failed only because of, you know, PGBP, unexpected, unpredicted questions. Only those who are conceptually strong, you know, can answer them very well. Those who are not conceptually strong, they cannot answer very well. Now you see 43B, H, 48.3A, 48.3A. Suppose, you know, March 10th. I spent some 50,000 rupees. I spent some 50,000. Remember, I didn't pay. 50,000. What is this? Some purchase of goods from MSMED. MSM, micro small enterprises I purchased. This expenditure I should pay by 25th April. This expenditure I should pay by what? 25th April. But actually what happened? I paid it on 30th April. I paid it on what? 30th. Sorry. 1 minute. I paid it on 20th April itself I paid. But how I paid, you know? I paid it in cash. Fantastic adjustment. 50,000 rupees I spent money on March 10th. Within 45 days itself I paid. 43B subsection H. Will this section attract? No, because you paid the money within the due date. So 43B H will not attract. But you paid it in cash. You paid it in cash. You incurred expenditure in the 23-24, but you made payment in 24-25 in cash. For 23-24, what is the disallowance? 0. Sir, SSC paid in cash, no more than 10,000. Accrual basis, he can claim deduction in 23-24. So no disallowance for that year. In 24-25, it is treated as income. In 24-25, again PGBP income will be computed, right? This 50,000 will be treated as income. This is the adjustment they ask. What many students did, you know, this 50,000 rupees, whatever amount is there, they added back because it is paid in cash. That's it. Very simple. Clear, all of you? Like this they will ask. So you must have a very good command on all the sections, interconnectivity, everything. That is what real conceptual learning, provision conceptual learning is means that only. We discuss so elaborately all this in our regular class. Such a fantastic discussion. We discuss so many combinations, so many problems, because that kind of discussion should be there. That is only when income tax. Last attempt our students scored 89 marks in taxation. The only reason, the kind of conceptual clarity he has. Okay, next. Remaining 6 expenses. No, what are the six expenses? Taxes, duties, other than income tax. Remember, other than taxes, penalties, you don't get deduction. Remaining all that, no, you will get deduction if at all you paid them within due date. Employer's contribution to welfare fund. Little minute, I will come back to it. Interest on loan and borrowing from banks, NBFCs, public financial, state financial corporation, industrial institution, corporations, all that, excluding loans from agriculture banks. Okay, payments by employer as leave encashment. Leave encashment, employer can claim deduction only if it is actually paid. Payments to Indian Railways. Payments to Indian Railways for using the railway property, all that, you will get deduction only if it is paid actually within the due date for filing IT return. That's it. Now, contribution. What is it? Employers. Remember, the word used is employer contribution to welfare fund. I have given a notes for it. Contribution to welfare funds. Employee contribution will be there. Employer contribution will be there. Employee contribution. Now, employee first I will discuss, because many don't pay attention. You know, employee contribution means you will collect from employee his contribution, PF. When you collect, no, it is treated as income. First it is treated as income. And if it is not paid within due date, under respective law dealing with the welfare fund, respective law, suppose, no, provident fund employee contribution we collected September 2023 amount we collected, it must be paid by October 20. It must be paid by October 20. April month contribution paid by May 20. May month contribution by June 20. Like that, whatever we collect from employee, no, discipline, it's not your money, it's employee money. Kindly pay them within as per the law due date. If you don't pay, what will happen? You know, it is straight away treated as income. Generally also we will treat it as income minus, in 36 I kept one point pending. 36 subsection 1 clause 5a. Many of you know this. What is this clause? When you collect income, when you collect contribution from employee, you will treat it as income. The moment you pay as per the relevant act due date, you can claim deduction here. Indirectly, net effect is 0. Indirectly, what are they saying? Suppose you collected employee contribution, but you did not pay within the due date as per the relevant welfare law, then it is straight away treated as income. 43B does not apply on employee contribution. It's a permanent disallowance. Understood? What about my employer, company's contribution? In his name I am contributing. I created a provision in books. You will get deduction only if it is paid actually. Disallowed indirectly if not paid within the due date. Subsequent previous year you paid, you will get deduction in subsequent year. That's it. Very simple. So what is a micro entity? What is a small entity? Investment turnover criteria is there. We have given. Next. Suppose Vijay is asking me, sir, if you purchase in August from MSMED and paid after credit period, then it is allowed in the same year. If the payment date in the same year, you will get a deduction. Simple. It must be paid within due date under MSMED law. If it is paid within the due date, you will get deduction for that year. If you pay after the due date on which it paid, you check. Is it the same year or not? You check. If it's the same year, you will get deduction. Simple. After due date you paid, which year it is paid, for that year you will get deduction. If the payment is the same financial year, you will get deduction for the same financial year. Disallowance will not attract. 43B is over. That's it. Now 40 subsection B. 40 subsection B, one of the most confusing provision for many students. 40 subsection B. Just 2 minutes. Almost 1.5 hours it is. Once this is over, another 10 minutes, 44 AA, AB, AD, AD I'll cover. Okay. PGBP, literally I'm covering everything. Literally every provision I'm covering. Yes. All of you. Next. Disallowances for partnership firms and LLPs. Very simple. For firms, know how to compute income of the firm. How to compute income of the firm which is liable to tax at flat 30%. How to compute the income of the firm. Very simple. Until now we discussed deductions, disallowances, all that, right? One difference is there between firms and others. Remaining all other entities and firms. One difference is firms will have additional two more expenses. Interest on capital and loan borrowed from partners. Remuneration payable to working partners. These two are the additional deductions for the firm. Now, interest on capital is allowed as deduction only up to 12% on the capital or loan amount which is contributed by partner out of his personal pocket. Partner has to contribute. Suppose partner is a company. In our firm, one company is a partner. On behalf of company, a director is attending. Now we want some loan. Director is paying out of his personal pocket. Remember, he is not the partner, company is the partner. Director is a representative partner. He is not the partner, he is a representative partner. Representative partner, personal money is paying. On that firm is paying 15%, 20% rate of interest. No disallowance at all. If partner is giving money out of his personal pocket, if company funds are given to the partnership firm as a loan, 12% limit apply. Simple logic. Over. So that's what individual, personal, representative person, all that. Okay. So first what you should do, so that is interest. What you should do now, how to compute book profit. Now no again, interest deduction you understood. Interest is allowed as deduction only up to 12% per annum on the capital or loan given by the partner in his own money, out of his own money. For that only 12% limit logic and all will apply. Sir, how to compute income of the firm? Very simple. First calculate PGBP income. Calculate PGBP income before reducing interest paid to partner, remuneration paid to partners. Any partner, doesn't matter. Sir, I paid interest to so and so partner, sir. Sir, I paid remuneration to working and non-working, all that, sir. Whatever firm paid to partners, money, add back all that, interest, remuneration, all that add back. Added back. That profit is called as first. That profit before allowing remuneration, first compute that. But after considering all deductions, depreciation, unabsorbed depreciation, disallowances, whatever disallowances applicable, 43B, 40A, 40 subsection A, TDS, or every disallowance is an add back, reduce everything. Compute PGBP income of the partnership firm just before interest reduction, just before remuneration reduction, just before interest and remuneration, compute. Okay, compute it. Now, first reduce interest on capital. First, what you should do? Reduce interest on capital which is paid to partners. Note number 1. Note number 1. Here, limits were as per the latest limits. For you, this limit is what? 1,50,000. Here, up to 6 lakhs is there, right? Here, your limit is what? 3 lakh. Getting it? That's it. So, for now, how much remuneration paid to working partners alone you identify. Sometimes in a problem, they'll give you payment to non-working partner. Disallowed fully. Working partner, how much you paid? check it out, because we already computed profit of the firm before giving deductions, means already net profit is there. We disallowed interest amount, we disallowed remunerations paid to partner, everything is disallowed. We computed income of the firm before interest, before remuneration. Now how much remuneration we can claim deduction? This is the question. This is the question. You know, first compute this, then reduce interest on capital, then reduce interest on capital. Look at this. Then what you get amount, right? That amount is called as book profit. That amount is called as what? Book profit. Look at once again. First calculate PGBP income of the firm after reducing all deductions, depreciation, unabsorbed depreciation, everything. Income of the firm you calculate before adding interest and remuneration. Then reduce interest. Then the balance amount is called as book profit. I hope now you are clear with respect to book profit. Book profit. Okay, I hope you understood book profit logic. Book profit logic you understood? Yes. Now book profit is there, right? Minus remuneration to working partners we can claim. Once you reduce this remuneration to working partners, you will get income of the firm. On this, firm will pay 30% tax. Balance will be distributed to partners as share of profit, which is exempted. Now how much remuneration? Working note 2. Working note 2. You see working note 2. What is working note 2? Actual remuneration paid how much? Sir, 2 lakhs I paid, sir. How much is permitted? Up to 3 lakhs worth of book profit, 90% of book profit, 1 lakh 50, whichever is higher, that amount you keep. On balance book profit 60%, that amount. And I hope you know how to compute this. Then this is the total eligible remuneration. This is total eligible. How much is actually paid to working partner? 1 lakh, 2 lakh. Eligible is 3 lakh. For example, whichever is lower means 2 lakh. Now reduce the 2 lakh here. So balance is firm's income. That's it. How to compute income of the firm? First calculate income of the firm as per PGBP provision, after deductions, after disallowances, everything as if normal business, sole proprietor. How to compute it? Before giving in, before reducing interest, before reducing remuneration to any partner, add back all that, compute PGBP income. Then first deduction, interest on capital. How much? Up to 12%. Reduce it. Then you get some profit, right? That is called as book profit. On the book profit, remuneration limits apply. Compute eligible remuneration. Compare with actual remuneration. Whichever is lower, reduce it. Then what you get, the balance answer is called as income of the firm. That's it. I challenge and tell you, nobody would have understood firm's taxation as simple as this. I hope you understood the firm taxation now as simple, in a simplest way I told. You have a lot of confusion. Everybody, every student, I'm telling you, book profit, they'll confuse. Oh, yo, book profit, how to compute? Everything they do wrong only. If a firm answer is, firm questions are given. Have you understood book profit? Book profit means what? Income of the partnership firm or LLP as per PGBP provision after reducing interest on capital, but before reducing remuneration. That's it. Next. Now, conditions, you know. The deduction will be only for interest and remuneration to working partner. Deduction is allowed only from partnership date, deed date. That's it. No deduction if at all remuneration is paid to non-working partner. You know, there is a new TDS section is added. This you remove it. It is not there for January exams. Further, remember, income of the firm, if it is distributed to partners as share of profit, is fully exempted. Any salary bonus by whatever name, that will not be, you know, simple, that and all, whatever you call it as, it is treated as remuneration. Working partner is an individual who is actively engaged in the firm affairs. Everything is covered. That's it. PGBP is predominantly over. Now we are having 44AA, maintenance of books of accounts. You see, I will show you 44AA. You will love the presentation. 44AA, you see, these are the SSCs. This is the entire 44AA section, single page, only one page, 44AA. What is 44AA? 44AA says 4 categories of persons has to maintain books of accounts. Who are they? Notified professions. Compulsorily they should maintain. Persons carrying on business or profession other than notified professions. People who are not maintaining, people who are not other than notified. Notified professions has to maintain, other business or professionals also have to maintain. Further, third category, persons declaring income under presumptive basis, lesser income, lower than presumptive income, they have to compulsorily maintain books. Persons to whom 44 AD subsection 4, 5 years declaration, remember presumptive taxation, that those who failed to comply with that, they should also declare in, they should also maintain books of accounts as per 44 AA. Now you see, notified persons, notified profession, 44 AA subsection 1, notified professions. Who are notified professions? Notified professions, what books they need to maintain? Suppose gross receipts exceed in all the 3 years 1,50,000. Past 3 years, right now 23-24. 23-24, ignore it. 22-23, 21-22, 20-21. In all the past 3 years is exceeding 1,50,000. Sir, mine is a new profession, sir. Then in current year it is likely to exceed 1,50,000. Then they all must maintain books of accounts as per rule number 6F. What? Cash book, journal, ledger. If at all bill value is, if the bill value is 25 rupees and above, copies of bill book is enough. Suppose if the bill value is more than 50, original bill has to be there. Payment voucher more than 50, all that. Doctors has to maintain daily case register, inventory register of medicines, equipment, all that. That's it. Sir, suppose I am a notified person, sir. I am a notified profession, sir. But my gross rate is less than 1,50,000, sir. What should I do? In other cases, you have to maintain books of accounts in such a way assessing officer can compute your total. Means you have to maintain reasonable books of accounts. Exactly what are prescribed you may not maintain, but reasonable books you have to maintain so that assessing officer can compute your income. Probably turnover register, expenses register you maintain. That's enough. Clear? What about persons other than notified professions? Other than notified professions, they are classified into individual and HO business persona. Others are, suppose individual, if income is exceeding 2,50,000 or turnover is exceeding 25 lakh in any of the 3 years, you must maintain books. If it is a new business, income is exceeding 2,50,000, turnover is exceeding 25 in the current year, then also you should maintain. Sir, I am others, sir, not individual. Then 1,20,000 income criteria, turnover 10 lakhs criteria. If it is in any of the 3 years, remember in notified profession it is all, whereas in business it is any. Clear? If you fail to maintain books of accounts, 25,000 penalty will be levied. Who are notified professions? Legal, medical, engineer, architecture, accountancy, chartered accountants, technical consultants, interior decorator, any other. Any other means what? Authorized profession, film artist, okay, profession of company secretary, information technology profession, all them. Accountancy profession includes cost accountancy, chartered accountancy, both. So these are the notified. Place, where should you maintain books of accounts? If at all you have only single place of business, at that place you should maintain principal place. If you have multiple places where books are maintained at each place, then respective place you can keep. Retention period 6 years from the end of the relevant assessment year. That's it. Now somebody is asking, Vamsi Krishna, what if WDV in PGBP is 5 lakhs? What is the depreciation? Very simple, 5 lakh, no? WD 5 lakh is only left. Out of that 4 lakh allocate for asset not used. 1 lakh only there. 1 lakh allocate for less than 180 into apply 10% rate. Sorry, apply half rate, 15 into 1 by 2. That's the depreciation. That's it. Over. Answer over. Normal depreciation over. Additional depreciation, same logic. Whatever it will, the same logic will apply. That's it. Coming to tax audit. Coming to tax audit. Who are liable to go for tax audit? 5 categories of persons. Business, turnover exceed 1 crore. Or if cash receipts are less than or equal to 5%, cash payments are less than or equal to 5% of the total payment, then 10 crore limit is applicable. Persons carrying on profession, if gross receipts are exceeding 50 lakh, then also they have to maintain, then also they have to go for audit. Persons declaring lower income than presumptive, then also they are liable for audit. Persons declaring income lower than presumptive under 44 ADA, they are also liable. Persons who are violating 5 years logic, they are also liable to maintain books of accounts. Simple. If at all fail you to get accounts audited, 0.5% of the turnover, 1,50,000, whichever is lower, is the penalty. And if tax audit is applicable, tax audit return shall be furnished on or before 1 month prior to the due date. Due date is 31st October for filing return. So prior 1 month means 30th September. That's it. Next, presumptive taxation. Presumptive taxation. 44 AD. What 44 AD says? Straight away, irrespective of your income, all that, forget about all your incomes, forget about all your expenses, forget about disallowances. How much is the turnover? Sir, my turnover is less than or equal to 2 crores, sir. Okay, 8% of the turnover, I will assume your PGBP income. Sir, my turnover is received in prescribed mode as per 40A3, sir. Other the bank, UPI, debit card, credit card, account pay check, account pay draft, in that way I received. Then on that turnover, 6%. Provided that turnover should be realized before due date under 139 subsection 1. Suppose you sold goods on credit, by due date for filing IT return, that sale amount you didn't collect, then on that sale amount 8% logic apply. Remember this point. Now 44 AD, 8%, 6% logic is there. Now when this is applicable? When the turnover is not exceeding 2 crore. Suppose your major turnover cash component is 5% only, your major turnover 95% is other than cash, then limit is 3 crore applicable. Be careful. Then this section does not apply to who are earning commission or brokerage, who are earning agency income, who are claiming deduction under 10A, deduction under chapter 6A heading C. That's it. But persons who are covered under 44AE and ADA, transport operator, notified professions, for them also this section does not apply. For them separate sections were given. That's it. And what is the important condition under 44AD? Once an SSC opt for 44AD in one assessment year, they must continue declaring it for the next 5 assessment year, which means 6 years continuously. This year plus next 5 years compulsory. Suppose in the next 5 years, no, if the SSC stops declaring in any of the next 5 years, no, that year you are stopping, right? For that year, books you have to maintain, audit is applicable if your income is more than basic exemption. Not only that, from that year, next year is next 5 years also, same logic will apply. That's it. They lose the benefit of 44AD for the next 5 years. I have given clear cut illustration here. Getting it? That's not required. It's okay. I hope you already know this. Notified professions. What is a notified professions? Only residents. By the way, presumptive income is available only for residents. Residents can be individual, residents can be HUF, resident can be firm other than LLP. LLP is not eligible, company is not eligible, AOP, BY not eligible. Only residents, individual HUF form. Same way 44 ADA, individual partnership forms. Getting it? 44 ADA, HUF cannot be a notified profession. HUF cannot be a doctor, right? Simple logic. That's why. Residents. Condition. What is the presumptive income? 50% of the gross receipts or any extra amount which you are paying. Minimum 50% you should declare income. Or if you want to show higher income, show higher income. Condition. Gross receipt shall be less than or equal to 50 lakh. Means it should not exceed 50. In case if your cash receipts are not exceeding 5%, then gross receipts can be up to 75 lakh. Are you clear? Suppose if the SSC is in the business of plying, hiring, leasing of goods carriage vehicle. Suppose if the SSC is in the business of plying, hiring, leasing of goods carriage vehicle, then 44AE is applicable. Then what is applicable? 44AE. You know, any SSC engaged in the business of plying, hiring, leasing of goods carriage vehicle, provided he should not have 10 vehicles at a time. 1st April 2023 to 31st March 2024, 366 days. Every day, how many vehicles he has? Every day he owned less than 10 only, or 10 maximum. Then no problem. 44AE he can go for. What is the presumptive income in case of normal good vehicle, not a heavy good vehicle? 7,500 per month or part of a month. In case of a heavy good vehicle, look at the gross vehicle weight. Look at the gross vehicle weight or unladen weight. They will give you either gross vehicle weight they will give you, or unladen weight they will give you. Both they will not give you. Either one only they will give you. Look at that. How many tons you see? How many tons the vehicle is having? You see, 1,000 rupees per ton per vehicle. Suppose if the vehicle is having 12 tons capacity, 12 into 1,000 rupees per month into how many months the vehicle is owned by the SSC? 11.5 months. 11 months, 5 days means 12 months. Part of a month is also treated as full month. That's it. That's the presumptive income. What are the common conditions? No deductions at all under 30 to 38. No deductions at all. Sir, it is a firm, sir, partnership firm, sir. What about remuneration, interest paid to partner? No deduction at all. Only under 44AE, interest and remuneration paid to partner is allowed as a deduction. This is a mistake in the department. This is a mistake in the income tax law, which I told in the regular class. It's actually a mistake. But no deduction for the firm for 44AD presumptive income, ADA presumptive income. Further remember, advance tax. For 44AE, all 4 installments of advance tax apply. AD and ADA, only 1 installments of advance tax will apply. That's it. PGBP is completed. Agriculture income I already covered. Okay. PGBP is completed. I hope you're all clear. Confident. Exhausted. Close to 1 hour 45 minutes. And I hope the kind of clarity that you got in PGBP is next level. I hope you got a clarity at next level. Okay. Now, you know, after some half an hour, just give me some half an hour to 1 hour, maybe at 12 o'clock I will start. Very exhausted. I will take set off and carry forward of losses, clubbing provision, or else can I do one thing, a small request to all of you. It's very heavy for me. You know, I'll show you one small marathon. Wait. Actually, now it is a live, right? I have discussed salaries provision in my previous. You're able to see. You're able to see. You see, you just type CA into income tax marathon. You will get this file. You see, you will get this file. First one, mostly first mine only you will get. You open this, okay? PGBP until PGBP revised. From now on, what I request you is, actually I thought of discussing salary setup and carry forward also, but somehow because you saw my aggression, because generally what many faculties do is they pre-record the marathons and then upload as a live. There are some softwares where you can present it as a live even though it is a pre-recorded video, but I am doing it directly in the live. So one small request I need, because I'm feeling really exhausted, so I'll do one thing for you, okay? So in fact I made myself ready for salaries. I'll come up with one more video, by the way, by evening, today evening or tomorrow morning. Today evening only I'll come up with top 10 adjustments that you need to remember. Like that, some videos I will be doing. But if at all you want to watch other marathons, remember these, the marathon which I uploaded in September attempt, that is absolutely relevant. So here you see I have given you timestamp. Here I have given you timestamps. You see, if you look at the timestamps, no, part 1 marathon, inside that I want you to watch salaries. You see here salaries is there. In salaries, no, RFA related amendment, leave encashment 25 lakhs related amendment, that and all were covered. Okay, so amendments were separately given. So but predominantly salaries chapter is mostly same. At gratuity you have some 20 lakhs limit, leave encashment 25 lakhs limit, that and all is there, correct? So and RFA related clarification also I have given, RFA related clarification. But anyhow, with respect to RFA leave encashment, I will come up with a separate video as I already told. Then capital gains is also there. In capital gains, amendments also I've covered. You see, amendments also I've covered in capital gains. You know, specified mutual funds, so all that. And since here I discussed even more detailed, not like this much speed, also little bit slow I discussed. So next, other sources also I've covered only amendment 10 subsection 10D, 5 lakhs insurance premium. Remember that? That one I covered. Clubbing and set off and carry forward, no amendments at all. Those two provisions. If at all possible, can you watch these timestamps and just update me here as a comment below? I will prepare another video. I will make another separate notes, top 10 adjustments, confusing adjustments that you need to clear. Minimum top 10 or top 15 I will cover, and do a video in the evening time. I will post the video in the evening. 99% I'll post the video. Getting it? So because I feel very tired, extremely tired. So I think I promised actually salaries and deductions, but those two, salaries, set off and carry forward alone, I'm just skipping it. But remember, my previous marathon is there. Mark my word, you will love the salaries topic there also. Actually I thought of showing you from my beautiful book. So salaries related one, we have a very good book. We have a very good book in salaries also. Just a minute. So you see, in salaries also I have a very good fantastic book. So I thought of doing it. I thought of explaining through this book, but very tough for me to handle this. But I will share the salaries PDF in the my Telegram group. We have a Telegram group, as I already told. In the description below, Telegram group link is there, Sreshta Fraternity. Okay, so in that group I will share the salary PDF and PGBP PDF also. But set off and carry forward, the book is yet to ready in next 2 to 3 days. Getting it? GST class is not there, because we have not planned GST class. Getting it? So but GST previous marathon is there, which we already uploaded. That marathon and once amendments class is there. If you watch those two, I'm telling you, you will get a very good clarity. And our faculty Mohammed sir is extraordinary. That's it. That's it. Adi is asking one concept, sir. What about accumulated interest concept of RPF? That takes little time. You can leave it, because 99% they don't ask it. Accretion concept, that you leave it. Taxable purpose, TP1, PC1, that logic is there. Averaging concept, that requires a little bit understanding of 7,50,000 provision, 2,50,000 provision, 5 lakhs provision. So much is there. So that's actually a bit tough topic. It cannot be done in at this moment, because tomorrow you're having exam. So don't try to learn at this moment. That's it. Okay, that's it. I'll wind up the session. I hope every one of you thoroughly enjoyed the session. I'm sharing this salaries PDF here. You please use it. In salaries, no, by the way, RPF especially RPF, I will show you RPF right now. How to compute RPF? First compute, just wait a minute. I will import it directly. I will just cover RPF provision alone. RPF provision I will cover. RPF provision I will cover. RPF, whenever you are computing income from salary, RFA, rent free accommodation. Whenever you are doing income from salary, rent free accommodation valuation, never do it at first. Income from salary, how to compute income from salary? First you calculate gross salary, then deductions under 60. Flat deduction 50,000 you will get, whether it is optional tax or default tax system, correct? RFA calculation must be done just before gross salary computation. Remaining telephone allowance, HRA, for HRA won't be there generally. If RFA is there, HRA generally won't be there. Contribution to RPF, contribution to pension scheme, all that, gratuity, leave, encashment, pension, everything you tax it. Finally, RFA will come. Sometimes in exam, RFA will be given in the first point, but don't calculate at first point. Calculate rent-free accommodation at last. Or you keep RFA at the first place itself, basic salary, DA, RFA, but don't put any amount. Don't do work right now. Do RFA working at last. Now, how to calculate RFA? First, you should calculate gross RFA perquisite value. How much? From that, reduce amount recovered from employee. Then you will get net taxable value, correct? How to calculate gross value of perquisite? Very simple. Sir, it's a government accommodation, sir. Suppose accommodation is provided by government, sir. Accommodation is owned or rented by government, sir. License fee is the perquisite value. Sir, hotel accommodation, sir. Government is providing to the employee in a hotel, sir. In such a case, 24% of salary, actual rent paid for the hotel, whichever is lower. This is the perquisite value for the accommodation. Gross perquisite value. For that, suppose government provided furniture also, sir, then original cost, movable assets, 10% per annum. If furniture is provided for 12 months, 10% per annum. If it is provided for 4 months, 10% multiplied by 4 by 12. Like that you should compute. So that amount. Suppose furniture is hired, sir, taken on rent, then rental expenses, sir. So perquisites related to furniture added. Then what is the accommodation? Total furnished accommodation gross value, how much? Sir, this value came, let us assume 10 lakhs, sir. Okay, keep the 10 lakhs here. How much amount is recovered? 2 lakhs I recovered, sir, from employee. Then 8 lakhs only taxable. That's it. With respect to government employee, it is over. Suppose, sir, accommodation is provided by other employer, not a government. Then it depends upon the population criteria. Remember, up to 31st August 2023, up to 31st August 2023, population criteria are different. 15 lakh, 10 to 15 lakh, less than 15 lakh, less than 10 lakh, less than 10 lakh. That time, 15% of salary, 10% of salary, 7.5% of salary. These are the 3 percentages. So for you, the problem is 23-24. RFA will be given. For 5 months, you should apply these rates. Up to 15 lakhs population, 15%. Sorry, 15, 25. 10 to 25. So up to 20, beyond, so more than 25 lakhs population, 15% of salary. 10 to 25 lakhs, 10% of salary is a perquisite. Less than 10 lakh, 7.5% is a perquisite value. Accommodation is given in a city where the population is more than 25 lakh, where the population is between 10 to 25, where the population is less than 10. These are the percentages up to 31st August, means first 5 months in the previous year. Remaining 7 months, perquisite valuation rule is based upon this population criteria. Perquisite valuation percentage is 10, 7 and 5. Remember this point. 5:7 ratio. Now sometimes, last exam, September attempt, if you see, leave salary paid to employee before retirement is there. 10,000 is there. All elements you have to take. Remember, what is salary? 10% of salary, 7.5, 15%, 24. Okay. Salary means what? Salary means basic you take. The retirement amount you take. Bonus, take it. Any commission, fixed commission, percentage of turnover, doesn't matter. Any commission, allowances will be there, right? In that only taxable portion you consider. Only taxable portion you consider. Getting it? If it is default tax regime, then default tax regime taxable portion. If it is optional tax regime, then optional tax regime taxable portion. So taxable portion of allowances you consider. Then okay. So salary you got. Basic DA, bonus, commission, taxable portion of allowances. Only that. Taxable portion of allowances means what? Suppose an allowance is there which is given per annum. Suppose 10,000 rupees is allowance is there per annum. This has to be split into 5:7. This has to be split into 5:7. So salary for first 5 months might be different. Salary for the next 7 months might be different. Are you getting it? So if any allowance which is taxable, no, if the value is given not on a monthly basis but on a per annum basis, then 5 months, how much? 10,000 into 5 by 7, 5 by 12, 10,000 into 7 by 12. Like that you compute salary for 5 months separately, salary for 7 months separately, and apply accordingly percentages and calculate the perquisite. Then so suppose, so that's it. I hope I've given you crisply the explanation. Suppose accommodation is rented, 10% of salary or actual, and whichever is lower. Hotel 24 or actual, whichever is lower. Now this value is the accommodation value. Whatever accommodation we give to employer, that accommodation value. Add furniture also provided. Same logic. 10% per annum original cost, all that. Then gross value of perquisite, how much? Now again, suppose no, to a non-government employee, gross value of perquisite came 15 lakhs. Minus amount recovered for furniture, for house, all put together, some 5 lakhs are recovered. Then 10 lakhs is taxable. This is how you should compute RFA. Getting it? Many students unfurnished, furnished, non-government, that and all not required. First gross value, how much given to employee, minus amount recovered, how much, balance taxable, how much. Gross value, what is the rule? This is the rule. License fee, these are the rules, sir. Furniture, all that. Over. In one page I have given you rent-free accommodation, entire provision of rent-free accommodation, one page. That too, presentation I gave you exactly the same way you should present in exam. Same you follow in exam. I will share this PDF in our Telegram group. Okay, that's it. If you have any other doubt, please put it as a comment below this video. I will reply to the comment. Okay, and coming to capital gains, rest of the salaries discussion, rest of the set off and carry forward, deductions, set of provisions. I request you to watch my previous marathon. As I already told, just some time before I told, in my previous marathon I have given, in this itself, deductions were there in part 2. This is part 1, right? 4 months back I uploaded part 1. Part 2 you have. In the deductions will be the tedious discussion will be there. So for those, refer those topics. Mark my word, guys, whatever the marathon you watch it till now, right, beyond that it is going to be effective, because there I discussed it much more detailed. That's it. Okay. What about indexation of RFA? For 23-24 year, you need not worry, because in 23-24 year indexation will not be there. 24-25 year onwards, if at all RFA is continued, further indexation will apply. For you, exams are only based on 23-24 previous year. For 23-24 previous year, indexation concept will not apply. First time you are computing RFA as per the amended provision, so you will not get indexation benefit. I hope I am clear to you. That's it. Whoever, some million fish room is there, can house property loss be carried forward? I clearly told 100 times. Yeah, that's it. Okay, I'll wind up the session. Thanks a lot for patiently listening, and do kindly share this video and other videos to your friends if at all they're also struggling to understand this. Okay, thanks a lot. You have to excuse me. Actually, I told salaries and set off and carry forward and clubbing also, but actually you can see my voice tiredness. Okay, it's very exhausted. But next time, to your juniors, okay, I will pre-plan and record pre-planned entire new marathon, and I'll put it in a live telecast, and I will be sitting along with the students in live clarifying all their doubts. That's it. Additional depreciation 10% on opening balance, if nothing is mentioned, you can't claim like that. They have to clearly tell you whether in the opening is there any brought forward additional depreciation is there. They need to clearly tell you. That's it. Okay, yeah, fine, bye, I'm winding up. And by the way, all the very best to your exam. Don't hurry, don't get tensed. Cool. Especially basic concept, total income problem, I told how to solve. Just focus on that.